Part 1. Understanding Quipper's business model and customer segments. Quipper provides a useful example of how an education technology company can create value for several customer groups at the same time. Rather than operating only as an online tutoring platform, Quipper combines digital learning content, school technology, assessment tools, teacher support, examination preparation, and university guidance within a connected education ecosystem. The first point to understand is that Quipper operates through both B2C and B2B relationships. Students directly use learning resources, practice materials, assessments, and university information. At the same time, schools and teachers can adopt Quipper as part of their teaching and academic management processes. This makes the customer segments block especially important. Secondary school students represent the most visible user group. They need accessible lessons, structured revision, practice questions, examination preparation, and support for improving academic performance. Teachers form another critical segment. Their needs are different. They want tools that help them distribute materials, manage assignments, conduct assessments, monitor progress, and reduce repetitive administrative work. Schools and school leaders represent the institutional customer group. Their priorities may include digitalization, better academic monitoring, improved teacher productivity, easier reporting, and more consistent learning resources across classrooms. University-bound students create another opportunity. Through Quipper Campus, learners can explore universities, programs, scholarships, careers and future education pathways. This allows Quipper to remain relevant beyond day-to-day school learning. The important lesson is that these customer groups are interconnected. A school partnership may introduce Quipper to dozens of teachers and hundreds of students. Teachers then integrate the platform into classroom activities, which increases student usage. Stronger student engagement can, in turn, make the platform more valuable to the school. Consider a practical example. If a school adopts Quipper School Premium, management may initially purchase the platform for digital assessment. Teachers then begin using its question banks and reporting tools. Students subsequently use the same ecosystem for assignments and exam preparation. One institutional relationship, therefore, creates several layers of value. This multi-stakeholder structure is one of the foundations of Quipper's business model. In the next part, we will examine the central question of any business model: what value Quipper actually creates for these different customer groups and how that value reaches them. Part 2. Value propositions, channels, and customer relationships. Quipper's business model becomes clearer when we examine its value propositions. Different customer segments use the same ecosystem for different reasons, so the company must create several forms of value simultaneously. For students, the primary value is accessible digital learning. Lessons, practice questions, assessments, revision materials, and exam preparation resources can be accessed beyond normal classroom hours. This gives students greater flexibility and provides additional support when they encounter difficult subjects. Teachers receive a different proposition. Quipper can reduce preparation and administrative workload through ready-made learning materials, question banks, digital assignments, assessments, and progress reports. Instead of creating every resource from the beginning, educators can spend more time interpreting results and supporting students. Schools receive broader institutional value. Quipper can support digitalization, academic monitoring, standardized learning resources, teacher productivity, and greater visibility into student performance. Quipper School Premium, therefore, competes not only as a learning application, but also as part of the school's educational infrastructure. Another proposition comes through examination and university preparation. Students can use Quipper for practice, while Quipper Campus extends the relationship into university selection, programs, scholarships, and career exploration. How does Quipper deliver this value? Its channels include websites, mobile platforms, schools, teachers, direct institutional sales, demonstrations, digital marketing, and customer support. School distribution is strategically important. A consumer application normally needs to acquire users individually. Quipper can reach an entire group through one school or teacher relationship. Customer relationships then determine whether initial adoption turns into recurring use. Students can use the platform through self-service learning, but teacher-led engagement increases frequency because assignments and assessments become part of normal classroom activity. Institutional customers require a deeper relationship. Schools may need onboarding, demonstrations, implementation guidance, teacher training, technical support, and ongoing account management. For example, selling a school license is only the first step. If teachers do not understand how to use the assessment system, utilization may remain low. Strong onboarding can turn the same purchase into routine weekly usage. This illustrates an important business model principle. Distribution creates access, but relationships create retention. Quipper therefore needs its value propositions, channels, and customer relationships to reinforce one another. Valuable features attract customers, effective channels bring them into the ecosystem, and continuous engagement gives them reasons to stay. Next, we will examine how Quipper converts this value into revenue, and which resources are required to sustain the model. Part 3. Revenue streams and key resources. Creating educational value does not automatically create a sustainable business. Quipper must also convert part of that value into revenue while maintaining enough resources to support students, teachers, and schools. The revenue streams block reflects a model that combines accessible digital services with premium offerings. Quipper School provides an entry point into the ecosystem, while Quipper School Premium allows institutions to purchase more extensive technology, content, reporting, assessment, and support capabilities. This creates a freemium-style logic. Basic access can reduce barriers to adoption and allow teachers or schools to experience the platform. Once usage grows, premium services can provide additional value that customers may be willing to pay for. Institutional education packages are particularly important because a single school contract can represent many users. Compared with acquiring hundreds of students separately, B2B distribution can produce more predictable commercial relationships. Paid learning and examination preparation services provide another potential revenue source. Demand often becomes stronger around high-stakes examinations because students and parents may be more willing to pay for structured preparation. Campus guidance and related services could also extend monetization across the student journey. The strategic objective is to increase customer lifetime value rather than depending on one transaction. To generate these revenues, Quipper requires several key resources. The technology platform is fundamental. Learning management systems, mobile applications, reporting tools, assessments, analytics, and infrastructure form the digital foundation. Educational content is equally important. Software without trusted lessons, question banks, assessments, and curriculum. Aligned resources provides limited educational value. Academic expertise therefore becomes another major resource. Teachers, curriculum specialists, assessment professionals, and content developers help maintain relevance and credibility. Quipper's network of schools and educators also functions as a resource. Relationships can create distribution advantages that are more difficult to reproduce than individual software features. Finally, data and analytics can support continuous improvement. Learning activity may reveal where students struggle, which resources teachers use most frequently, and where schools need additional support. Imagine two edtech companies with similar applications. One has excellent software, but weak educational content and few school relationships. The other combines solid technology with credible content, teacher engagement, and institutional distribution. The second model is generally more defensible because several resources reinforce one another. Quipper's challenge is therefore not simply to own technology, but to combine technology, education expertise, data, content, and relationships into one scalable system. In the next part, we will look at the activities, partnerships, and cost required to keep that system operating. Part 4. Key activities, key partnerships, and cost structure. A business model only works when the organization can consistently execute the activities required to deliver its promise. For Quipper, these activities extend well beyond software development. One major key activity is educational content development. Lessons, question banks, assessments, exam preparation materials, and teacher resources need to remain accurate, engaging, and aligned with curriculum requirements. Platform development is another continuous activity. Students expect simple digital experiences, while teachers require reliable workflows and schools need reporting, administration, and security. School implementation is equally important. Institutional sales must be followed by onboarding, teacher training, technical assistance, and adoption support. Without these activities, a school may purchase the platform but never integrate it properly into teaching. Academic quality management also matters. Quipper must review content, assessment standards, curriculum relevance, and educational accuracy. Trust is particularly important when teachers and schools depend on the platform. Marketing and user engagement complete the operational cycle. Students must be encouraged to return, while schools need evidence that usage is generating value. Quipper also depends on key partnerships. Schools are obvious partners because they provide both customers and distribution environments. Teachers function as practical adoption partners because they introduce the platform into everyday learning. Universities and higher education institutions contribute to the usefulness of Quipper Campus. Technology providers support cloud infrastructure, cybersecurity, communications, analytics, and payment capabilities. These activities and partnerships lead directly to the cost structure. Technology development and maintenance create ongoing engineering costs. Content creation requires teachers, academic specialists, production teams, and regular updates. Institutional growth creates sales, onboarding, training and customer support costs. Cloud services, cybersecurity, software infrastructure, marketing, compliance, and administration add further expenditure. The key economic question is whether revenue can scale faster than these costs. For example, a digital lesson can potentially serve thousands of students after it has been created. That is highly scalable. By contrast, assigning one support specialist to every school creates costs that rise almost directly with customer growth. Management therefore needs to automate what can be standardized while reserving human support for activities where it materially improves adoption and retention. This balance between educational quality and operating leverage is central to Quipper's economics. In the final part, we will connect all 9 blocks, examine the value proposition canvas, and draw strategic lessons from Quipper's overall model. Part 5. Integrating the canvas, value fit, competition, and strategic direction. The most important lesson from Quipper is that the 9 business model canvas blocks should not be viewed independently. Their real value comes from how they work together. Customer segments create demand. Students need learning support, teachers need productivity tools, and schools need digital education infrastructure. Value propositions respond to those needs through learning content, assessments, classroom tools, reporting, exam preparation, and university guidance. Channels then deliver the proposition through applications, websites, schools, teachers, institutional sales, and digital marketing. Customer relationships turn access into ongoing engagement through classroom usage, support, feedback, and implementation assistance. Revenue streams capture part of the value through premium school solutions and paid education services. Key resources such as technology, educational content, academic expertise, data, and school relationships make delivery possible. Key activities maintain the system, while key partnerships expand capability and distribution. The cost structure reflects the investments required to sustain the entire ecosystem. The value proposition canvas gives us an even closer view of customer fit. Students have jobs such as studying curriculum topics, completing assignments, preparing for exams, identifying weaknesses, and planning future education. Their pains include difficult material, fragmented resources, time pressure, exam anxiety, and uncertainty about university choices. Teachers face another set of pains: repetitive preparation, administrative workload, assessment effort, and limited visibility into student performance. Quipper responds through ready-made resources, online access, digital assessments, reports, integrated tools, exam preparation, and university guidance. Fit occurs when these solutions measurably reduce customer problems or create meaningful gains. Competitive positioning also matters. Ronguru has built a broader consumer learning ecosystem that includes digital learning, tutoring, and physical centers. Pahamafy has historically focused more heavily on student engagement and examination preparation. Quipper can differentiate by strengthening its institutional position around schools, teachers, and connected learning workflows. Several strategic priorities follow from this analysis. Quipper can deepen its role within everyday school operations, measure learning outcomes rather than registrations alone, strengthen teacher network effects, expand adaptive learning, connect school performance with university guidance, and use artificial intelligence selectively to improve productivity and personalization. For business leaders, the broader lesson is straightforward. A strong digital platform is not created by adding more features. Competitive advantage emerges when customer needs, distribution, relationships, resources, activities, revenue, and costs reinforce the same strategic position. Quipper demonstrates how an education technology company can move from being a digital content provider toward becoming part of the operating infrastructure of learning.